Welcome back. You're watching Market Fatafat on ET Now, a show where we get you the stocks that are buzzing based on news flow as well as on technicals. And talking about technicals, we have Ashish Kyal joining us on the show right now. Ashish, good afternoon to you. And the first stock that you're going to talk to us about is Deepak Fertilizers. How are the charts for this one looking like? We did see a sharp spike yesterday in all of these fertilizer names, and primarily it was on based on news flows as well. But on the charts, do you think that the fertilizer stocks are looking attractive?
Yes, indeed. If you look at Deepak Fertilizer, we have seen some spectacular rise on the upside. After forming the low around 555, the stock is now at 650. But there is still volume picking up over here. So any dip on Deepak Fertilizer, if you can get it around like 645, use that as an opportunity to buy the stock for the target of around 685 levels on the upside and maintaining a stop loss of 620.
Okay, surely keeping an eye out on those levels for Deepak Fertilizers. But let's move on and talk about the next stock that is in focus, and that is Varroc Engineering. Now, why is Varroc Engineering in focus? Because Varroc Polymers, which is Druro Valves India Private Limited, they have entered into a purchasing agreement, a parity agreement with AMP Energy of 21 Private Limited Company, and for an acquisition of 21% stake for establishing renewable power plants in Maharashtra. And this is going to be for a cost of acquisition of around 13 crores. It's a very small acquisition. They're 26% stake. But yes, on the back of this news for today, we are seeing Varroc Engineering has been buzzing in trade, and as of now also holding on to gains of around 5.3%.
Right. This one is an auto-eyeing company which is into a power purchase agreement. So that's one of the reasons why it's buzzing in trade. Next up, let's talk about Electronic Smart India. Why is this one in focus? Because you have Equirus that's come out with a notice. One of the top picks is what they are saying. They have a long rating on this one. They see an upside of approximately 67% or so on the stock price. They're expecting a target of 230 rupees per share. They are saying that the company reported a revenue of around 1,690 crore rupees in the quarter gone by, which was 8% ahead of their own estimates. They're saying lower intensity of unseasonal rains in the southern market led to a 30% year-on-year growth in their RAC business. They say EBITDA margins also came in sharply above their estimates in the quarter gone by, and they believe that the Q1 performance was encouraging, and it's considering the demand weakness and the unseasonal rains impacting the Delhi NCR region. They expect a strong demand momentum to continue for electronic marts during H2 with the onset of the festive season, which is followed by summer products demand. They expect to see a strong, healthy same-store sales growth as well for the company. So on back of that, you have Equirus, which is giving a thumbs up to Electronic Marts India, and that's why the stock is seeing an uptick as much as 1%. No doubt the volumes are pretty low.
Absolutely. Let's move on to the next one, and Piramal Pharma, Ashish. That's the stock that you've picked out for us on the charts and technicals. What is it that is an indication that you're picking up for Piramal Pharma? You know, since June, we've seen a sharp pickup coming in Piramal Pharma. What is the upside that you're expecting?
So Piramal Pharma is showing a very strong move on the upside. We can see it is about to break its 110 level, which is the previous low high. So the overall trend is positive. It's also bounced back from its 20 days average and sustaining that, forming a rounding bottom kind of a pattern. So the overall trend looks positive for Piramal Pharma. On the upside, one can expect a target of around 120 levels. And on the downside, the support for the stock is around 104.
Moving on then, Ashesha, let's talk about RHI Magnesita. Why is this stock in focus? In fact, it's buzzing in trade.
Well, yes, it is buzzing in trade, 5.5% higher as we speak, and this is after the Competition Commission of India has approved acquisition of nearly 29.9% equity stake in RHI Magnesita NV by Ignite Luxembourg Holdings. The company also said that the proposed combination leads to an indirect acquisition of RHI Magnesita India Limited, as no shares will be transferred by the Indian company, and that is the reason the stock is buzzing in trade today. RHI Magnesita NV actually conducts its business in India through the subsidiary RHI Magnesita and also exports to India. So on the back of this approval that the company has received from Competition Commission of India with respect to investment in the company, the stock is holding up nearly 6% higher in trade as we speak.
Okay, let's move on and talk about the IT stocks. Ankita, you've picked out the whole pack. Why is this one in focus today? What is the reason?
That's correct. Many have picked out the whole IT pack because there's a note that has come out by Nomura, and Nomura says that in the IT pack the revenue growth is likely to pick up in FY25 forward, and it will be aided by large deals coming in for the sector. Now, the margin improvement is likely to be slow as cost takeout projects would weigh on the margins, and they remain cautious on the sector given the limited visibility on the significant turnaround in discretionary demand for the IT services. Now, on the back of that, couple of counters to mention here. TCS, they have maintained a reduce and hiked the target price to 3,040 rupees per share. Infosys, they have upgraded it to neutral from reduce, and they've hiked the target price to 1,410 rupees per share. On Wipro, they are maintaining a neutral and hiked the target price to 420 rupees per share. HCL Technologies, they are maintaining a neutral, and they have also hiked the target price here to 1,220 rupees. Tech Mahindra, they are maintaining a buy and hiked the target price to 1,470 rupees per share. LTI Mindtree, they are maintaining a reduce and with a target price of 4,585 rupees per share. Coforge, they are maintaining a buy and with a target price of 6,480 rupees. Persistent, they are neutral on the counter, and they have hiked the target price to 5,650 rupees. L&T Tech, they have reduced. They're maintaining a reduce on the counter. Also hiked the target price to 3,480 rupees. And finally, Birlasoft, they're maintaining a buy on the counter, and they have set the target price to 610 rupees per share. So a lot of stocks in the ID pack are likely to be in focus today on the back of this note that has come out by Nomura.
In fact, Ankita, not likely to be. They already are in focus given the fact that we had the Nomura report, and most of them are reacting to that report as well. But Ashish, let's talk about Tech Mahindra, and where do you see this one headed from here on? Because this one is actually seeing a lot of interest, 19% uptick in the last 6 months. Not disappointing, actually.
Yeah, absolutely. So Tech Mahindra looks very strong. If you look at it, it's also outperforming Infosys or TCS for that matter. The stock has managed to form a very strong basing pattern, which is like a cup and handle, and giving a breakout out of that. The target for Tech Mahindra on the upside comes to around 1,350 levels over short term. But if one wants to invest into this and keep it from the medium term perspective, you can expect it to cross even above 1,600 levels. So the upside looks promising. On the downside, the support for the stock is at 12.33.
Okay, let's move on and talk about the next stock that is in focus, and that is Shriram Finance. And this is on the back of a brokerage, I beg your pardon, on the back of bulk deals that we've been seeing coming in. This happened yesterday. Now we have the names coming in last evening, where Small Cap World Fund actually sold 20.26 lakh shares in the company, which is at a price of around 1,880 rupees per share. And other than that, we have New World Fund also, which sold 26.67 lakh shares at the same price as well. So on the back of that, we've seen two sellers coming in here. The stock has been in focus, recovered from the day's low point. As of now, trading almost flattish, nothing exciting happening here.
All right, that's Shriram Finance for you, but let's talk about one of the top buzzes in trade today, and that has to be L&T. Ashish, L&T on the charts, where do you see this one headed from here on? More upside, lot more upside?
Yeah, indeed. L&T has been an outperformer all the while, and even now, if you look at the stock today, it's showing a very strong bullish candle pattern formation. And that too comes after a huge volume pickup. So it's a very healthy sign, price rise along with the volume. And the stock has managed to break out above that 2750 mark, which was the immediate hurdle. So the target on the upside for the stock is at 2950. We can expect that to achieve over next few weeks time or few days time. And one can maintain a stop loss of 2720 levels.
All right, moving on, let's talk about TVS Motor, because this particular stock is also at a record high level in today's trading session. It actually launched a new Apache RTR 310 at a price starting, S-showroom price starting at around 2.42 lakh rupees. The launch comes actually at a time when Hero MotoCorp as well as Royal Enfield, and let's not forget Bajaj and Triumph also, and Hero and Harley have actually launched new premium bikes in the market. So the timing of this particular launch is pretty interesting. If you look at the price range, similar to that price range as well. But the stock right now has given up all of those gains, but still hit a record high level on an intraday basis.
Okay, that is TVS Motors for you all. But let's move on and talk about Mascow Dock. And on the charts, Ashish, how is Mascow Dock looking like? We had seen a sharp rally coming in, 187% returns in the last 6 months. Is there more upside left, or should one actually start booking profits finally?
Yes, we have seen a steep run-up in the stock, no doubt about it. But if you look at the stock over the past 1 month, it was moving in a very consolidation fashion in the form of a triangle pattern. And after that consolidation, we are seeing a resumption of the upward, which is a very positive sign. So I think the pause is now again resuming on the upside in terms of trend, and one can create long positions even now in the stock. And we can expect a target on the upside at around 2,300 and maintain a stop loss of days low, which is around 1890 levels. So that can be a good stop loss.
All right, moving on then, Ashesha, let's talk about AU Small Finance Bank and why is this one in focus today?
We have some management commentary that has come in, which is quite positive. Morgan Stanley, in fact, met with the management where they said that they are retaining their loan growth guidance of 25 to 30% and growth will come from across segments. They expect better fee income trends to continue from here on, and this will be helped by higher revenues in credit card business. A strong commentary that has come in from the management. Asset quality trends, meanwhile, are expected to remain benign, while they expect credit costs to remain around that 30 to 40 basis points mark in the near term, and they've guided for return on assets to be in the ratio of 1.7 to 1.8% for during FY24. So in the back of this commentary that has come in with respect to loan book and return on assets, the stock is holding up nearly 0.5% higher in trade as we speak.
Let's move on and talk about these EMS stocks, whether it's a Keynes, Amber or Dixon. Why are they all in focus?
Vinny, they are all in focus today because on the back of a note that has come out by CLSA. Now, CLSA says that the aggressive policy is likely to support this particular sector, and the global supply chain shift is likely to aid and benefit India. Now, to scale the opportunity, speaking of the opportunity, it is going to be some 20 times in the next 2 decades is what CLSA says. And also on the back of that, they're saying that Amber will benefit from the rising consumer adoption of room air conditioners, and Keynes is a well-diversified play with presence across various industrial segments. And on the back of that, they have initiated a buy on Amber with a target price of 3,650 rupees. And if we can see that the stock is already seeing an uptick of 1.5% in trade. Keynes, they have initiated an outperform with a target price of 2,230 rupees per share. On the back of that, Keynes also is seeing an up move of almost 3% in trade today, and that's the reason why these stocks are in focus today. It is on the back of a note by CLSA.
All right, so that is all those electronic manufacturing stocks that are in focus. But let's talk about Westlife then, Ashish, and how is the chart looking for this one, similar to that of Jubilant Foodworks, do you think? 46% uptick in the last 6 months, more steam left?
In Westlife, if you check, it formed the important low around 900 level, and the stock is again back on the upside. We can really see the mid-cap, small-cap space is buzzing with specific stocks, and Westlife, I think, is going to perform. It is consolidating right now in a range, but I think the breakout is going to be on the upside. So long positions can be created here. We can expect a target of around 1,020 for Westlife, and one can maintain a stop loss of 940, which is the multiple support zone.
Okay, that is the reason why we are keeping the levels that we're keeping an eye out on for Westlife. But let's move on and talk about Dreamfolks, and why is that one in focus? That is also in focus on the back of a multi that we've seen happening, where small cap gold fund has sold around 13 lakh shares in the company, which is equivalent to around 2.46% stake in Dreamfolk Services at an average price of 507 rupees per share. That amounts to total 66 crores. So on the back of this, today we're keeping an eye out on Dreamfolks. We had the names coming in last evening of the seller, and that is the main reason we're keeping an eye out on this one, while the buyer of that is around Genome Broking, which bought around 3.98 lakh shares in the company. So keep an eye out on that. Dreamfolks in focus.
All right, moving on, let's talk about Macrotech Developers then, Ashish, and we saw DLF actually have a very good run over the last 6 months. Macrotech Developers also following suit, 63% uptick. Do you think realty stocks still have more steam left going ahead, or do you think after such a good run-up, it will consolidate at least tad bit?
If you look at realty stocks, they have been sharply underperforming about 6 months prior. If you look at it, they have corrected sharply. And we can see that they have started outperforming now in the 6 months time, which is a very positive sign. I think there is a lot of catch up to be done, and reality is the space that one should be focusing on right now. And if you look at macro tech, it has given a good move, breaking out the resistance level, managed to cross back about that 20 days average again. So I think the stock can move towards the level of 790 on the upside, and one can maintain a stop loss of around 695 on the downside.
All right, moving on then, and let's talk about Force Motors. And this particular counter is in focus on back of its August sales, because if you look at the total sales in the month of August, I've actually seen an uptick for as much as 47% on a year-on-year basis. And sequentially, it's seen an uptick approximately 17% on a year, 17%. Also, if you look at the total vehicle production, also actually rose for Force Motors up by about 28%, and it came in at around 3,032 units. So yes, on back of this pretty buoyant data, you can see Force Motors trading higher by about 5%.
Absolutely. Locked in upper circuit, that's Force Motors for you all. Let's move on, talk about the next stock on the charts and technicals, that is TCI Express, Ashish. And what are the charts indicating now for TCI Express? Last 6 months been quite subdued, and especially in the last couple of days when you look at it, it has been marred in trade as well. What is the view now on this one?
TCI Express has been an underperformer. We have not been any kind of a uptick until today, and today is the first candle that we can see a very strong rise, and the volumes are also picking up. So the volumes are suggesting there can be a short-term retracement that we can expect in this stock towards the level of 1560 on the upside. So one can create long positions but maintain a very strict stop loss around 1420.
Okay, let's move on to the next one, and that is Bank of Baroda, Ashesha. Why is Bank of Baroda in focus today? What's the news for you?
Yes, strong management commentary is what is helping the stock hold up in trade today. 0.5% higher in trade as we speak. So the company, or rather the management, said that loan growth guidance of 14 to 5%. The management has maintained its loan growth guidance. They say that margins could moderate further, but they are maintaining their guidance of 3.3% margins for this year, that is for FY24. Asset quality will continue to remain benign, and they have no plans to raise funds as their CET1 ratio currently stands at 12.4%. So in the back of this management commentary that has come in, the stock is in focus, holding up with gains of 0.5%.
All right, moving on. Ankita, let's talk about Indigo then, and why is this one in the spotlight today?
That's because, Cheryl, there's a note that's come out by Goldman Sachs on Indigo, and they are maintaining a buy on the counter with a target price of 2,600 rupees per share. Now, they feel that the lower yields and higher fuel prices are driving, a weak Q2, and they expect a loss of, rupees 11 per share in Q2. And on the back of that, they are maintaining a buy, and, they have given a target price of 2,600 rupees per share. And on the back of that, this stock is going to be in focus today.
All right, moving on then, Ashesha, let's talk about Tata Consumers. From yesterday's top gainer, today has become a top loser in trade, and why is that?
Yesterday afternoon, we had reports which suggested that Tata Consumer Products is in talks to acquire at least 51% stake in Haldiram. So on the back of that, the stock was gaining nearly 3% by the end of yesterday's trading session, and now company has gone ahead and clarified that they are not in talks, and this is completely false. On the back of this report that has come in, or this clarification that has come in from the company, the stock has reversed all of its yesterday's gain, today sitting with a cut of 2.5%.
Okay, and let's move on and actually listen into a move that is aimed towards empowering the healthcare community with a financial wisdom. This week, SBI Mutual Fund presents Invest Smart Mutual Fund Fund Ke Saath. Powered by ET Now, will feature a special episode dedicated exclusively to doctors. This unique investor education show will delve into the critical significance of financial planning tailored to meet the needs of medical professionals, while also shedding light on the key strategies to secure their financial future. Let's listen in to this excerpt.
Why do doctors specifically need to be aware of financial planning? What is your thought behind that?
Absolutely, Sumit. As they say, doctors always try to help us be in the pink of health, right? But doing so, they forget, how to be in the pink of wealth as well. They're so busy helping others, and that is where I think personal finance becomes really very important. Today everything revolves around money. So if from beginning we know the importance of money, I think then later we don't have to struggle for it.
What I sincerely believe is that ultimately all of us, not only doctors any which way are spending so much time away from their home, and they are always busy. But any one of us who really needs to plan well for his or her finances needs to have a Sarthi. So it's very important. Mutual funds are a good way of starting your investment journey. But I think what is more important is for you to understand that what are your needs, what are your goals, when you want what kind of money, and you have to plan, in advance.
And to watch the entire episode for more insight, tune in at 4:30 p.m. today, or also if you've missed today's episode, then Sunday 10 September at 7 p.m. But with that, we come to an end of this edition of Market Fatafat. Thank you so much, Ashish, Kunal, as well as Ashish and Ankita for joining us on the show. And as we wind down on this edition of Market Fatafat, opportunities outside banks look interesting. This is according to Rishabh Seth of Karma Capital. Listen in to what else he had to say about banks and also where he's actually seeing growth emerge.
You have to be the most cautious in the smallest names because there, I think, for whatever it's worth, the execution challenges are still going to be pretty high, especially companies which are maybe doing less than 100, 200, 300 crores of profit. I think there, if the valuations are at a point where you don't, you are expecting flawless execution for many, many years. So I think basically I would be the most cautious in the smallest name and then kind of less as you go higher up the curve. No, I think banks will do well. I mean, we have nothing against the banks. We always ask this question. I think it's more a question of there are opportunities elsewhere which are maybe more interesting. Structurally, banks, struggle with getting past 17, 18% ROEs, even in the best of the times in terms of cycles. And I think from an investment cycle perspective, we are in a sweet spot in terms of the economy. So that we feel that there are other better opportunities. I'm sure banks will also do well. I think pharma and healthcare, we are looking more from a domestic standpoint, not so much from an offshore standpoint. Offshore, of course, most larger companies do have exposure. But I think it's the domestic which kind of makes us most bullish. We think that overall, the domestic healthcare will continue to grow. You will continue to see consolidation. The top players will continue to gain market share, at least the good quality ones. And I think it's a very long-term structural growth story. We are maybe at the beginning of it. I think the biggest change we've seen is in pharma is capital allocation. I think capital allocation for larger businesses have become much better over the years, especially over the last 3 to 4 years. And I think that's starting to show up in the health of their balance sheet. So as the balance sheets become more and more healthier, I think their ability to capture the domestic growth kind of continues to go up exponentially. And I think that to us is the most interesting part in the healthcare space. We think that, and that's what our portfolios reflect. So if you look at, say, a pharma or a telecom, or for that matter, media, and then, of course, bottom-up ideas across the auto components, even infrastructure companies like airports, sports, we see that at least next 1 to 3 years, we see a good opportunity. And we think that these companies are very well poised and they are also available at a reasonable price. So for us, that's very important. You can have a very good play structurally, but if you pay a wrong price for it, then on the longer term, it becomes more challenging to justify.